Yes.
Perfect. Thank you, Dil, for inviting me. My name's Akhil Mair from our mortgage broker. I am the MD of the business, but more importantly, your specialist mortgage broker, specializing in all types of property and mortgage finance. Bit about our mortgage broker. We've been in the game for nearly 2 decades in property and in finance. We're a multidisciplined firm. As I said, we specialize in all types of finance. So whether you're a first-time buyer, you're a portfolio landlord, a commercial investor, whether that's through retail or a property developer, we've got access to all the lenders in the UK market that can offer you structured finance. So whether it's for a mortgage or a property finance. We've also got a great power team behind us. For those that are more interested, please log on to our website, which is ourmortgagebroker.co.uk. And the reason why we've got a strong power team is because we understand the complexities of buying property in the 21st century. So we've powered up with professionals in the arenas of such as chartered architects, chartered surveyors, chartered accountants, financial planners, and so on. So we understand that the complexities that go with buying property is not just arranging finance. You need to take up professional advice from, as I said, like the likes of yourselves as architects and planning consultants, to name a few. So we are a one-stop shop, and we like to call ourselves professionals, and we're here to serve our clients and build relationships with you. And nonetheless, we are FCA regulated as well, so we can help with regulated and unregulated transactions. So what I wanted to touch on, there's no real script, so I'm keen to make it a two-way conversation, but I've got a few areas that I want to touch on, and just bullet points on what I wanted to share with you. So coronavirus turned up in 2020. No one was aware of it. No one expected this whatsoever, but it's here. In March, we had a huge reaction by the UK leading lenders across the book, where most lenders actually pulled out of the mortgage market by way of not taking on any new business or by way of reducing their loan to value and the appetite. The reason why they did that was, well, there's two main reasons. One was the government announcing mortgage holidays. So all the lenders were inundated with mortgage holiday applications and they were overwhelmed. And then the second part was arranging remote working and arranging remote technology for those people that needed to work away from their regular office space. So the lenders had to concentrate on their existing pipeline, concentrate on working out how they're going to, the tech going forward, and serving those applicants that want to take up these mortgage payments. So that's the reason why the market reacted in March. Since March, we've had a number of lenders come back onto the market, predominantly in April. We've seen a load of lenders come back into the market, the likes of Precise, the likes of Kent Reliance, the likes of TMW, a lot of the specialist lenders and the quirky lenders. And these are the guys that are our go-to lenders because of the way property investing has turned and the foreseeable future, how we see it. Lenders like Foundation Home Loans are currently still not taking new business, but we understand in the next week or so, they are going to be back up to speed and taking on new business. So watch this space. So that's how the markets reacted in March and in April. From a business standpoint, where we're inundated with calls, we're still doing new business, whether that's for new purchases via bridging loans, via traditional mortgages. We are still taking on applications. Lenders are still open for business, and the likes of conveyancers and bank underwriters are still taking on business, and they're still seeing that pipeline through, albeit with valuations, which is quite a hotly contested component at the moment. Yes, valuers, jurists, chartered surveyors can't go out to visit properties for the obvious reasons. However, a lot of lenders are now adopting AVMs and desktop valuations where possible. So they will apply for the desktop or the AVMs via their surveyor panels. If there's enough data, by collating data from land registry and other resources for previously sold prices, they can share that with the lender and then potentially give you a mortgage offer. If the property doesn't allow for a desktop valuation, they are then they're basically underwriting the entire deal, and it's subject to, so it's a mortgage offer subject to valuation. So it's business as usual. The timeframes have been a little extended. It's obviously that's going to happen. People are working from home. Their co-workers are not working by sides of them, so they're communicating by other means, by email and telephone. So there is a little lag in that perspective. So you guys, majority of the people on this call are professionals. I know there's architects in this calls, but there are people that have got mortgages. So I wanted to touch on, particularly in this conversation, is around bridging finance and development finance. So bridging finance, for those of you that don't know, so please excuse me if I'm teaching you how to suck eggs, but bridging finance is, it's basically a short-term solution for those people that want to buy property for many reasons. So if you're looking to buy property and you've got a 4-week closing time, traditionally you can't arrange a mortgage and complete within 4 weeks. So for a safe bet, it's better to apply for a bridging loan to complete within that period of time. The caveats are bridging loans are slightly more expensive than traditional mortgages, but the benefits are that they can quietly be confident they can complete within that 4-week period, for example. And there's less stringent due diligence on the application and the applicants as well. So it's more about the security of the property in question and what's the exit, so what's the solution coming out of the bridge. Bridging finance has always been known as a very expensive form of financing, which is very much true, and it used to be in the early 2000s. But the cheapest bridging loan lender at the moment is offering rates from 0.5% per calendar month, which equates to 6% per annum. So I've arranged mortgages for people with adverse credit, and we're paying 9.29%. So in effect, bridging loan seems very cheap in comparison. But as I said, it's got its advantages, and it's not an off-the-shelf product. So bridging finance is very much dictated to, as I said, the security of the type of security, the type of applicant, the mortgage, the loan amount, I should say, and what's the exit. So it's not like a traditional mortgage from Halifax where it's 1.99 fixed for 5 years and there's a 995 fee. Bridging is very much, it's a very competitive market. It's a market that we enjoy working in because we fight for our clients and ensure that we get them the best rates. So basically we'll basically have lenders competing for your business. So if anybody is interested in discussing bridging finance and how it can be a useful tool, please do get in touch with us at our mortgage broker. So development finance. Now, at the moment, we're going through very much uncertain times. Who knows when we're going to come out of this pandemic, when we're going to find a cure and all that good stuff. So what we do know is that it's great that DL has organized Zoom events like this, and it's all about self-educating. And I love when Ranjit speaks on behalf of Property Investor News because he's a very positive character and he shares good wisdom. And I think let's not lose sight of the ambitions and our drive. Property's always been a safe asset, a safe vehicle to invest in, but done correctly, right? So we always talk about the heights of the market and where the depressions are. Some may say we are entering that depression market. So some are talking about a U model where we're sort of at the bottom of the U and we should have an upward trend and see prices go back up. Some were saying that we're going to have a V-shaped model where there's going to be a huge spike in property prices, and some are talking about a W. So we may have an increase in property prices, but then a fall flat. To be honest with you, who knows? We're all weathermen at the moment. We're all forecasters. We don't really all know the truth and what's going to come out of it. But what we can be assured of is the UK have a shortage of housing. The demand's pent up. I've heard this word recently. There's going to be huge pent demand about property in particular. So as I said, we're an island. You know, we're not going to be increasing our floor space in the UK. There's definitely opportunity to buy property, to develop property, and there's lots of opportunities out there. And I will touch on the opportunities coming up in a short while. With regards to development finance, just to give you a rule of thumb, typically lenders look at loan to GDV and they work backwards. So loan to GDV, for those that don't know, is the loan to value against the GDV, which is the gross development value. So what's the end value of your project, your scheme? The usual rule of thumb is 70% loan to GDV or 90% of cost. So loan to cost, which is the acquiring and the build cost. Whichever the lower is, that's usually the format that the lender will lend on. I won't go into the exact structure of the finance because it is very much bespoke to the scheme itself, including the developer's experience, who the JCT contractors are, have they got any pre-sales already agreed, is there any personal guarantees in the background that the developer can put up, and other collateral as well. So for more information around structuring that particular finance, as I said, it's like bridging, it's very much dominant on the particular scheme itself, and with those other variables I just touched on. Rates, I know rates are a very hotly contested topic and everyone wants to know about rates. As I said, bridging finance starts at 0.5% per calendar month, and so does development finance. So it does start at 0.5% per calendar month. As I said, it's very much dependent on the loan size, the security itself, and the GDV as well. So every lender's got their own appetite and criteria, and location does play a key part as well. But for more information about that, please do get in touch with us directly so we can really deep dive into your scheme or a potential scheme that you might be interested in investing in. So opportunities. I speak to a lot of our clients. A lot of our clients are first-time buyers. A lot of our clients are seasoned investors, portfolio landlords. A lot of them are transitioning from residential property now into commercial and developments. So we've got a vast array of clients that we support, we help advise, and we do that by connecting them with our power team in the background. So more information can be found on our website there, our mortgagebroker.co.uk. So the opportunities going forward, the short answer, it depends on your attitude to risk, I would say. A lot of people thrive on recessions. A lot of people thrive on opportunities like this. It's unfortunate that we're having a large amount of deaths, and nobody ever wants to see that. But putting that to a side, there is definitely going to be opportunity with regards to property. I think we're going to find developments half finished. I think we're going to have developments half finished. Developers have gone broke or bust, and there's going to be opportunity to pick those up for a great price. I think, as I said, it depends on your attitude to risk, but I think look at properties where there's multiple purposes of opportunity. So you buy a property and look for plan B, plan C, and plan D. And the other opportunity is look through PD, so permitted development. And I think that's a great opportunity to look for properties that you can add value to by way of PD. And then that allows for you not to put in a planning permission application into the local council where it's 50-50 and it's depend on Mr. Smith or Mrs. Smith to approve your application. And we don't know what the timescales look like. With permitted development, I think it's 56 days. I think the guys on this call probably touched on it, but I think it's about 56 days or 57 days that they've got to approve, prior approval, I think it's called. But forgive me, I don't know the terminology or the timescales there. Other opportunities, I think, are office to resi conversions. It's been done for many years now. I think with people working remotely, I think a lot of these large corporations are going to be adjusting their mechanisms of staff and how they work going forward. I think we're going to have a lot of people now working from home potentially, and a lot of these large corporates are going to be looking at how they can cut back on their overheads and increasing their balance sheet, because it's probably taken an effect over the last couple of months. So look out for those opportunities with office spaces in particular, and then there's an opportunity there to convert, I believe within permitted development in some scope, into residential there as well. Other opportunities are networking, and I'm a huge believer of networking. I probably do at least 1 or 2 Zoom calls and webinars like this on a daily basis, which is good because I'm here to educate myself. And then that way I can share it with my clients and my colleagues and my other business partners as well. So it's all about networking, self-educating yourself, because we can never know too much, right? And there's always something to learn. And that's the beauty when I jump on these webinars, and hopefully you agree with me, there's always something to take away from it. So I've talked about the opportunities, I've talked about the reaction from the lenders, the rates on bridging and development finance. I will quickly touch on the mortgage space in particular. So we've got the buy-to-let space. More and more lenders are entering the limited company space. And the simple reason for that is because investors are now investing in a limited company simply because of the Section 24 ruling. For those of you that don't know, Section 24 came into effect 4 years ago, and it's by way of not offsetting your mortgage interest rate relief over the last 4 years. So prior to buying property 4 years and beyond, you could offset 100% of your mortgage interest rate relief, but going forward, as of this year now, this tax year, you can only offset a flat 20%. However, if you buy property in a limited company, you must take advice from your accountants or from other professionals around the tax perspective of investing in a limited company, and then the accountancy fees and so on. But there are benefits of how you can offset the interest rate relief, and a lot of lenders are now taking advantage of offering these products in a limited company space, and the rules on lending is a lot more flexible, less stressed. So by purchasing property in a limited company, in particular those residential properties, are a lot more beneficial, and the way they work out the stress testing can be more beneficial and allow you to borrow more money in a limited company, whereas if you were buying traditionally in your personal name. As I said, for more information, do get in contact with us there. We can talk to you about numbers and the differences as well. So we'll always give you a difference, options, I should say, whether you should buy in a personal name, whether you should buy in a limited company. We'll give you options on 2-year fixed deals, 5-year fixed deals, tracker deals as well. So there's no fast rule for anybody. Every deal is very much different, and it's very much tailor-made to your circumstances. What else can I tell you? This call wasn't scripted at all. It's a call for you guys to ask me questions. Dio, if there's any questions, let me know. I'd be keen to answer those.
Yeah, I've got a couple of questions. So, in terms of, and everyone's heard that term mortgage holiday.
Yeah.
That's actually a misdescription in terms of what it's actually saying. Can you go into that a bit and clarify that it's not actually a holiday?
Yeah, no, you're totally right, and I think the government actually slipped up there. To be honest with you, I think they've worded that totally incorrect, because on the face of it, it looks like you've got away with not paying any mortgage payments for 3 months. However, I've told my clients, if you do want to take a mortgage holiday, just be aware that those payments that you miss are going to be added onto your loan. Interest is going to be accrued, and eventually you will need to repay that after a 1 month, 2 month, or a 3 month period. So the negotiations and how they structure that repayment of those many months that you have a holiday for, you will need to repay it. So speak to your lenders directly, have those conversations, and before you do that, just think, do you really need a holiday? And I understand people have been furloughed, there's different circumstances, and I'm totally okay with that and understand that. But just be conscious of that if you do take mortgage holidays, lenders going forward may ask, if you are looking to buy a new property or refinance a property going forward, they may ask you, did you take a mortgage holiday? Now, the government have definitely announced in some of the lenders that it won't be a black marker on your credit report, which is great. However, lenders may ask you, did you take a mortgage holiday? What was the reasoning for it? And it may alter their decision. So just be conscious of that piece in particular. Do take the holidays if obviously you need to, but just be assured that it is not a holiday. You do need to pay those monies back, and you'll have to come to an arrangement with the lender directly.
So I'll be right in thinking it might not be a black mark, but it'll be a grey mark, and there's obviously 50 shades of grey. Some get very close to black.
Nicely put. Yes, I totally agree.
Yeah. I mean, the other question that a lot of our guys will have on here is that you're obviously, you've got projects that are ready to build.
Yeah.
And sometimes someone's looking to buy those. So is it possible to do that on a bridging finance, i.e. buy a project and get it started, or does that need to go on development finance?
Yeah, no, it's a good question. So a lot of the bridging lenders have now got a development finance product as well attached to the deal, because a lot of clients that buy property to add value. So that could be a tear down. You're buying a property to tear down and build up ground up, or it could be by way of increasing the footprint. So it could be an extension, double story backside, and so on, and add another floor into the airspace. Bridging lenders are comfortable with you doing that. However, you must apply and comply with local regulation and laws. So you may need to apply for planning permission. So a lot of lenders will ask you, especially in the bridging space, would be, what's the plans for the property? Is this a flip? Is this just a cosmetic refurb? I.e., is it just I call it a tart and turn. So painting, new decorating bathrooms and kitchens, or is it a fully fledged restructure of the property? So if it is just a tart and turn, I will ask for a schedule of works. If you are going to be doing an extension and applying for planning permission, before you're able to put a spade in the ground, they will ask you for your planning permission from the local council to be approved, and then they'll share that with you. And the beauty about bridging finance is those lenders will then tweak and convert that bridging loan into a development finance facility. So then that's where the negotiations start, from moving that to a bridge to a development finance. And then ultimately it's, what's the exit? Is this a build to rent scheme? Is this a build to flip scheme? And then that's where we play that part. So we'll hold your hand, we'll hold the client's hand from cradle to grave. and we'll ensure that we have that exit lined up at the end as well. So if you are looking to retain that property, we'll ensure that we've got a buy-to-let lender in the background that's ready and willing to lend on that certain project as well.
Fantastic. That was some really useful information. I know you're busy, and just to recap, thank you for coming in at the last minute. We had a last minute change around, so thank you for your time. Thank you for sharing your knowledge and you know, some of your ideas. If you hand the control back, I'll put your details on so that Akhil's not only really great guy, he's got a great mortgage service. He's also got a power team that can help you in terms of your projects. Quick go through who have you got in your power team. I know you've got some party wall surveyor that can.
Yeah,
useful.
I forgot to mention that actually. Yeah, if anybody's looking for a great party wall surveyor, I know a guy called Dill. So Dill's one of our power team and our go-to guys with obviously the party wall surveying and contests. We've got financial planners, we've got planning consultants, we've got chartered architects, accountants, chartered surveyors, and so on. But we're always looking to work with the right professionals, and it's all about building relationships and understanding everyone's professions and how everyone works. And as I said, as we're a multidisciplinary brokerage, we can help all types of clients. As you're a first-time buyer or a commercial landlord, we're willing and got the expertise here to support you in your transaction.
Great, thank you for your time. If you hand the control back to me, I think I know what I've messed up in these setup. So
That's cool.
if you hand the hosting control, I'll put your details back on screen so that everybody can send some details in.
Perfect. I've made you the host, Dill.
Oh, brilliant! Well done. You've obviously done this before.
We're a Zoom specialist now.
Yeah, Zoom seems to be the new skill to learn at the moment. So I'm going to share this Akhil's details. So there's Akhil's details. Please get in touch. Akhil, thank you for your time. I know you're a busy man. You've got to go.
No, the pleasure was mine. Thank you for your time, guys. Any questions, reach out by telephone or email. Thank you all.
Right.
Stay safe.
Thanks.